Hey everyone out there, what's going on? Welcome in to another edition of Market Takes. I am Dion Rabowen, your host, reporter here with the Wall Street Journal, and we're doing a look ahead, looking out to some of the very important, very key data, economic data that we're going to be getting this week, and just talking about how that is likely to affect the market, because this week is one of the biggest weeks that I think we've seen in a long time, especially after the big sell-off that we got in stocks, and the moves that we got in the bond market, and all of that really across markets last week in response to that jobs number. You saw the U.S. economy added 263,000 jobs, minimal revisions, slightly better than expected, but the market did not take that well. And so as we come into this week, we have a really consequential week in terms of a number of data reports that are going to tell us a lot about inflation and about the U.S. economy. Right now, we're in this interesting place where, bad news is good news and all that, people talk about it. But I want to break down just kind of what that means and why that is. Because really, the market has kind of gotten into its head at this point that the Federal Reserve is going to keep raising rates until they see inflation break, that they're not going to kind of reverse course the way that a lot of folks were predicting. We saw a bit of the beginning of last week, this kind of relief rally. Okay, things are getting worse on the economic front, so the Fed's not going to have to do as much. And then that jobs report was kind of what broke the spirit or broke the back of the market, because it showed that, hiring continues, wages continue to grow, the economy is intact, and now you've got an interesting sort of situation where you're going to see a lot of folks hoping for worse data, hoping that, the economy maybe does break, so the Federal Reserve doesn't have to continue tightening monetary policy and making it more difficult to borrow money for businesses to grow, et cetera, et cetera. So we're going to dive into all the data that you can expect this week. We have 5 big reports that are coming out. 5 reports, not all of them would normally be a big deal for the market, but I think this week, especially if you see some differences in some of the reports, some of these other smaller, less watched and less followed reports are going to be big this week. So we're going to talk about the consumer price index as well as the producer price index. We get both of those this week on Wednesday and Thursday. I'm also going to talk about the U.S. retail sales report. That one's going to be big. And if that wasn't enough, we are wrapping up the week with the consumer sentiment index from the University of Michigan. I think consumer sentiment is going to be something that the market is going to be really keyed into and tied into. And we're also going to break down what to expect from the import-export price report. That's going to kind of give us a look forward at what inflation could be doing and how it's moving. And I'm going to talk about each one of those individually and what they could mean collectively for the market. So look, let's start with what's become the most widely watched piece of data in the market. That is the consumer price index for September. That's coming out on Thursday. CPI day Thursday is going to be a big one. Economists are predicting that CPI rose 8.1% in September and 0.2% month over month, that 8.1% year over year number. Now, that number is really important because economists think that we stayed above 8%. It means, that's a number of months over 8% inflation, that we're not breaking that number yet. If we break through and we get below 8%, even though, 7.9% would still be high historically, very high, that would suggest that we are seeing inflation start to break through important psychological barriers, and that it's falling in the way that the Federal Reserve wants it to, and that they really feel like they need it to in order for them to slow their roll and kind of chill with all the hikes on inflation. If it is higher than 8.1%, and particularly if it's higher than 8.3%, where it was in August, that year-over-year number, you could expect to, and you should expect to see a big-time market sell-off. Within the data, you've also got the core CPI. Now, that's been moving in the opposite direction, even as CPI has kind of come down from 9% where it was in July. Even though CPI has come down from where it was earlier in the year when it peaked up at 9% in June, not July, in June, we are seeing that core CPI number start to tick higher. And that's because of housing and because of food, particularly food you buy at the grocery store. Those things are eaten into people's pocketbooks, and that's the thing the Federal Reserve really looks at. And if they see that tick higher, even as overall inflation and headline inflation, as they call it, is moving lower, well, that could be cause for more concern on the market. So watch that core number. That's expected to be 6.5%, up from 6.3% in August. Watch that core number. That's going to be big. We've started to hear talk that maybe inflation hasn't peaked from the Federal Reserve. Vice Chair Lael Brainerd said in a speech at the end of September, this is a worry that the Federal Reserve has, that they're not seeing inflation peak and that maybe it could even go up above that 9% number. So that's something big to keep in mind and to watch for. As you're watching out for that consumer price index number on Thursday, the day before, we get PPI, the producer price index. That number has been kind of consistently moving lower. That could also move the market in anticipation for CPI the next day. That's expected to be 8.3%, down from 8.7%. We are seeing PPI, wholesale prices, producer prices, essentially what businesses are paying for the inputs and the things they buy to produce the goods that you and I, who are consumers, buy. Those numbers are ticking down. And what the hope is that producers, because they're seeing the effect of inflation, will start to mark down those price increases, maybe increase by a little less, in hopes that then those declines in producer prices get passed on to consumers. Businesses are still clearly passing those price increases on to consumers. Even bigger, again, we keep seeing that in the earnings data, that businesses are marking up prices more than the pace of inflation. So if the pace for their inflation, PPI, comes down, we hope to see that in the consumer prices. The big report that we're going to get on Friday, U.S. retail sales. Now, this is normally a big report in its own right. It's going to be even bigger if we see declines on CPI and PPI or increases in CPI and PPI. That retail sales report is going to be huge. It's normally just thought of about as looking at the health of the economy. I think for this month, it's also going to be about inflation. If retail sales is strong, that's going to mean that inflation has not abated. Also, again, folks in the market are looking for a recession. You know, you want to see the data start to cool down notably and start to really, fall off a bit. That sounds strange. You normally don't want the economy, or you want the economy to be healthy. You don't want to see staggering or really low retail sales. This month is a month where I think if retail sales is too high or too strong, you could see a big sell-off in the market, especially if we've seen high CPI and high PPI. So keep your eyes on that U.S. retail sales report on Friday, especially after, if we've seen a big market pickup or a big market decline after CPI and PPI. Watch that retail sales report. That could throw the whole thing in the garbage, completely change the narrative, a lot like we saw last week with the jobs report. Last thing, also on Friday, sorry, not the last thing, second to last thing, the penultimate thing, if you will, we get the export-import data for September. That's also on Friday. Friday is going to be a big day because we could see a lot of the momentum built up this week kind of change, move, or if we see that retail sales report and the export-import data move in a similar direction, which is down. The market wants to see these things all come down, wants to see these things all getting weaker. That export-import price, that's going to tell us it's declined for 2 straight months, is expected to decline for a 3rd straight month. If we get that, I think you could see a very strong market reaction because it will likely signal that inflation is coming down. The amount of money that we're paying to import goods to the U.S. and the amount of money we're getting when we export goods talks about the health of the global economy, overall what prices are doing, how they're moving. That's going to be a report that I think really on the margins could move things, but if it moves in the same direction as the other data, if it corroborates the story, that export-import number is going to be big. Last but not least, the actual last report that I think is going to be important for this week is going to be the University of Michigan's Consumer Sentiment Index for October. So these numbers that we've talked about are all looking backwards. CPI, PPI, export-import prices, retail sales, all looking backwards at September. Consumer sentiment is going to look at October, and it's a survey that the University of Michigan does. It's much more concurrent what's happening now. Really, I think the market wants to see consumers a little worried, a little concerned, backing off of making more purchases, especially big purchases. The details of that report are going to be big. In terms of if we are going into a recession or if consumers still feel good and can go out there and buy things and, they may be feeling a little bit down about inflation, but we saw this number start to pick up from that June number from when we got the lowest level on record for the Consumer Sentiment Index. And it picked up until last month. It was still higher than the month before, But the second reading kind of was lower than the first, and now we're expecting to see consumers getting worried, losing confidence, and that number moving lower. I think that might drive the market higher if we see that in concert with these other reports that we get on Friday. So to wrap it all up, you got PPI on Wednesday. That's going to give us the first look at what inflation could be. The market hasn't had anything to really chew on, or won't have a lot to chew on except for Fed speakers and some minimal data up till that Wednesday PPI, producer price index number. That could move the market. Thursday, CPI, that's the big one, baby. That's the big deal. And then we get on Friday, you get these three reports: export-import data, you get US retail sales, which is going to be the big one, and of course that consumer sentiment index from University of Michigan, all on Friday. Each one of those could move the market in a big way, so watch out and make sure you're parsing through the details. I won't be here with you. I'm going to be taking advantage of that strong dollar going to Europe, trying to, get that 1-to-1 or even better than 1-to-1, the strongest value for the dollar in about 20 years. But keep watching, and we will be back with you in late October to keep breaking down this data. Hope you got everything you needed from Market Takes. I know you could have been anywhere in the world, but you're here with me, and I appreciate you for doing that. And we will see you when we are back from Europe. Hopefully I don't come back broke. I got a little bit of money left, and don't get too excited about that 1-to-1 dollar to euro. But we will be with you next time, and I hope to see you then.